Hello Sector Watchers, this is the 49th episode of Sector Spotlight on Tuesday the 22nd of September, recorded on the 21st. Welcome to the show. I am Julius de Kempenaer and your host for today as usual. And yes, I am still coming to you from Amsterdam, the Netherlands. I'd love to hear from you, so if you watch the show on YouTube, please don't forget to like the video, or even better, share your thoughts, ideas, suggestions, etc. in the comment section. I'm always on the lookout for new ideas that I can cover in an upcoming episode of Sector Spotlight. So don't be shy, your feedback and your questions are appreciated. I'd like to take the opportunity to point you to the upcoming special later today here on StockCharts TV, the introduction to StockCharts ACP, the future of technical analysis. This is the new advanced charting platform that a lot of people at StockCharts have been working on very hard behind the scenes, and the result is fantastic. A very neat and clear interface with a lot of great functionality to work your charts. And this is already built in, many more functionality is on its way. Even if you are only remotely interested in charts, you should not miss this event. And let's face it, if you were not interested in them, you would not be here. Today's episode of Sector Spotlight is all about markets. Before the break, we'll discuss last week's rotations in asset classes and sectors, and take a look at the longer-term asset rotations. After the break, we'll dive into sector rotation on a weekly basis and hopefully be able to step away from the erratic rotations that we currently see on a day-to-day basis. Let's start with a look at the performances and rotations for asset classes and sectors. On the left-hand side, we have the asset class rotation, and on the right-hand side, we have the sector rotation for last week. If we look at the table for the performances, that we see that the benchmark, the Vanguard Balanced Index Fund, is pretty much unchanged, slightly lower, while especially commodities stand out with 4.2% for the GSCI Commodity Index and 2.3% for the Bloomberg Commodity Index. We'll have a look at that later on. What's also nice to note here, or well, maybe not nice to note, but interesting to know, is that VBINX is 60% stocks and 40% bonds. We have ITOT, which is the stock market, down 10 basis points, and we have government bonds, GOVT, which is the US Treasury bonds aggregate, I should say, down 20 basis points. Together, that would imply a negative return for VBINX, were it not that included in the 40% bonds is also corporate bonds. And that's what's sort of keeping VBINX unchanged or only slightly lower, and that we have stocks and government bonds both lower. So just so you know that the bond section in VBINX also includes non-government bonds, and that's the reason why it's now flat. If we look at the rotations, very clearly a weak week for stocks, with ITOT moving from the weakening quadrant into the lagging quadrant, and government bonds moving from improving into leading, sort of reflecting the relative rotation that's playing out, at least in the short term, between stocks and bonds, which, by the way, is clearly in favor of bonds right now, as you can see here. Again, we're going to look at that on a longer term time frame later on. So the takeaway for the asset class rotations this week is that government bonds, at least in the near term, taking over from stocks, and commodities standing out with pretty strong returns in last week. If we quickly move to the US sectors, which we have on the right hand side, the chart is ending on Friday the 18th. As you can see, the sectors that have been doing really well over the last months: communication services and technology. We acknowledged it, and we spoke about them last week, that they were weakening and they were rotating negatively. That rotation, because if we go back 1, 2, 3, 4, 5 days, this is where communication services and technology were last week. And then we browse forward 1, 2, 3, 4, 5. And we see that the negative rotation for XLC and XLK has continued, and they're now both inside the lagging quadrant. And XLY actually separated itself from those two with a stable rotation. And just like if we highlight that, XLY, where are you? Here. Turning up and into the leading quadrant, and now back with a very, very, very short tail. And as you know, short tails mean stable relative trends without a lot of momentum. And this one especially, because it is exactly at the 100 level on the momentum scale at the right. So it's a positive relative trend without any momentum. What caught my eye, and which is an interesting observation on this RRG, and this one is until last Friday. If we include, look at the performance numbers here. This is 5 days, so this is Monday through Friday of last week, and we see that energy actually did really well with +3%, industrials 1.5%, materials 1%, and very weak performance for communication services -1.7%. Discretionary 1.5% down, staples down 1.5%, technology down 1.1%. And now if we scroll back, so the market has just closed on Monday night, the 22nd, and so it's the 21st. It's like it's after midnight that I'm recording it. So this is the close of the 21st. If we browse that, it's September 21st, that's Monday. Look at that table of performances. So today was a very weak day, and you see how that pretty much turned that whole table upside down. Last Friday, the 5-day periods was like this, and now it's like that. It's all negative, and the S&P is down 3% over the last 5 days. What I see here, and I actually wrote a blog about it today, is that these daily rotations look very erratic. What I mean is that they move into the leading quadrant, or technology and communication services move into the lagging quadrant, and almost immediately they start turning around. So these trends are not very strong. They don't have a lot of follow through, because they come into, let's stick with the ones in the leading quadrant. So it's like 1, 2, 3, 4, 5. So well, this was last Monday. This was Monday a week ago, and they go in and within a few days start turning around. And so we started this new week with all these tails rolling over downward, and we started the new week with communication services and technology inside lagging and immediately picking up momentum. So it's very hard. I think it's very hard to read at the moment. So this sector rotation is not very solid. It flies everywhere. I've called it erratic in the blog that I wrote today, and it's sort of sending the signal that the market is very nervous. Sort of people don't know where to go. One day they go there, the other day they go there. So there is some news out there, and then everybody flocks to these sectors, and then another news message comes out and they flock to all the other sectors, and that's what's causing these very rapid rotations on the daily chart. That's the reason I actually loaded up the VIX. I probably should look at the VIX more often. I don't do that all the time. But in this case, I thought it was interesting to look at the VIX, because what I think I'm seeing on the RRG is uncertainty. You know, sectors going one way one week or a couple of days, and then the other way the other couple of weeks. And that's what we see in the VIX as well. It's picking up slowly. It's going higher. It's not like trending lower. and especially now we see that it's coming out of that August low, moved higher, came off, and now it looks as if we're putting in a new low in the VIX, and started to move up, especially if we include today's value. The VIX seems to have put in a new low and moving higher, which sort of coincide and matches that erratic daily rotation that we see on the sector RRG. Let's have a look at the asset class rotations in a little bit more detail and from a longer term perspective. So we're going to switch this one to a weekly RRG. It gives you pretty much a different image. And I'm going to load up my charts here on the right hand side. On the weekly scale, stocks ITOT is still moving further to the right, and government bonds is still moving further to the left, as is corporate bonds, as is high yield. High yield started to turn up. Dollar still weakening, and we've got commodities moving over to the right, from the left to the right. So they're doing pretty well. Let's start with those commodity charts, because they're quite interesting in terms of their moves on the RRG. They've been underperforming and they've been very, very weak for a very long time, and it seems that is now changing. If we start with the Bloomberg Commodity Index, we see this is a serious rally out of that April-May low, and you see how it is running into resistance in that area between, let's say, 19 and almost 2050. There's a serious resistance area. This trend is clearly down. We see that the momentum of the downtrend has been stalling. That's why RS momentum moved up, and that's dragging the RS ratio up. But you see that the momentum is the highest we've seen since a couple of years, and the RS ratio is still not there. It's just about crossing above 100, and this RS line it's not very strong yet. And if you look at the price chart, the way I look at it is that this commodity index is running into a lot of resistance, so we need to overcome a lot more resistance before we can actually push higher for the longer term. So yes, we are moving to the right, yes, we are entering the leading quadrant, but I'm not sure how sustainable this move is going to be, because there is so much overhead resistance and such a long-term downtrend in play that we need to turn around. Even if this is a long-term turnaround in commodities, I do believe that we will get a better entry level in coming weeks. If we quickly move to the GSCI Commodity Index, it's somewhat similar. This one is also running into heavy resistance in the, 370, 365, 370 level for dollar GNX. That is what I'm looking at. And we also see a serious downtrend in the relative strength, in the raw relative strength line. Here also a very high momentum level. We haven't seen that for the last 5 years, and it's already starting to come down again. So again, also, if this whole commodity complex is working in putting in a longer term low, I do believe that we will get a better entry in coming weeks, maybe even months. Now, one thing that I want to show you on the bonds and stocks relationship, and I'm going to isolate those two on this chart, so it's ITOT and GOVD, because it magnifies the move a little bit, make the tails a little bit longer, fit it, and you see that rotation is rolling over more in favor of government bonds over stocks, at least for the short term. I mean, this is a weekly chart, so it's looking at longer term trends. Stocks are in leading, bonds are in lagging, but the momentum is fading, it's picking up in bonds. So that speaks in favor of bonds for the short term. If we look at that on a daily basis, we see that magnified a little bit better. One chart that I looked at is if you put that ITOT against GOVT straight away, then we could see this as a broadening formation. It's probably too long. It spans over 3 years, which for chart formations is very, very long. The original authors of technical analysis of stock trends, Edwards and McGee, usually didn't look at formations over these time frames, but the characteristics of a broadening formation are very often toppish, and they indicate uncertainty in the market, which is pretty much exactly what we're seeing right now. So if, and only if, we could read this as a broadening formation. And again, I don't know if we could call it a broadening formation, but it looks like it. It is certainly sending us a message of uncertainty. You see these waves getting bigger, these swings getting bigger. They are a matter of uncertainty. We've just touched that upper boundary of that upsloping line. This ratio can go a lot lower. If that happens, that means that bonds are preferred over stocks, and usually that means that stocks are going down. Again, it's early, it's short term, but for the next couple of weeks, I want to be pretty cautious with taking new positions in the stock market. We're going for a quick break, and after the break, we're going to look a little bit more in depth to the rotations in US sectors. And welcome back. Thank you for staying with us. Before we dive into the sector rotations, I want to spend a few seconds on this chart of SPY. About 6-7 weeks ago in Sector Spotlight, we talked about the 322 level in SPY and why that was important. And the 6th of July, that's the dashed vertical line here, is when we spoke about that. And then you can see that if we didn't know what was happening to the right of that vertical line, of course. You can see that 322, 321, roughly the whole 320 area was an important resistance area for SPY, especially if you also take into account that gap area that happened back in February. So when we then pushed against it, broke it, and we pulled back, you saw that area around 320 was very important, first as resistance, and once broken it came back and it played a role as support. We are now touching that 320 area again, but there are some, I was going to say subtle, but they're not subtle. There's serious differences. If you look at the structure and what was happening in the S&P 500 in the run-up to early July, you see that this is roughly a series of higher highs and higher lows, which is characteristic of an uptrend. If we look now the way that we're approaching 320 from the upside downward, today actually confirms that a new series of lower highs and lower lows is in place. This high here at 341, 342 is clearly lower than the all-time high that was set at 357. And as we broke below the low at, say, 330, we don't know yet where that new low will come in. But one thing is a given, and that it is lower than the previous one. So it sort of confirms lower highs, lower lows. Now, this is on a daily chart, so it is short term, but it's sending a short term negative signal. If we switch to the longer term S&P chart. This is the weekly version. We don't see that much detail, so we don't see that lower high, lower low rotation that we just saw on the daily chart. But we do see that we're touching that 320 area where the previous peak was, and it's now acting as support. So in order for this long-term chart to remain as powerful as it is right now, we do need to hold in this area and start moving higher. Before this whole structure completely breaks down, at the moment we could even go to 300, because even then we wouldn't have a lower low on the weekly chart. In all honesty, I think it will be very unrealistic that we would move all the way down in one straight line. So we need to monitor this chart as well to see where the new highs and lows are coming in. For the time being, I'm watching that 320 area on the weekly and also on the daily as an important level. Long term, trend still intact, but only just about. And in the short term, we're getting some negative signals. We'll have to wait and see whether that 320 area can hold that decline that started here, and this is only a very short-lived downtrend, or it is the beginning of something more significant, which will also break below 320 on the weekly chart. Let's quickly move to what's happening in sectors. Discretionary is staying at the right-hand side with a very short tail, indicating a stable relative uptrend, and that is still there. Let me quickly bring up that chart for you. So here is consumer discretionary. You will see the breakout. You will see the stability of the relative uptrend that's still intact. RS ratio still moving higher with little or no momentum, but still stable. So that's all good. On the price chart, there is plenty of room to wiggle to the downside before this one actually turns around. So discretionary remains a very strong trend. If we look to technology, that has changed, and it is changing more and more. And this one is updated until today. So this one was until last Friday, and this is the week before. And you can see, especially this big velocity, this big move in technology downward, that's indicating big momentum. The last one is only 1 day of trading, so we can't say much about that yet. But that big move down in technology is sending a negative signal, at least for the short term. If we look at the price chart, if we bring on the price chart here for technology, we will see that technology is playing with the 110 level. But here also, because this move has been so very strong, we could even go as low as, let's say 100 without, well, we're harming this uptrend. But if you look at the bigger structure, we say high, low, and maybe even another high and low. So we filter out, we see this is an intermediate trend, and this is the next one, and this is the next big wave. We could go as low as 100 without damaging that uptrend, without damaging that structure. And also on the relative chart, we have a lot of room before this one is actually going to completely turn around. We're inside weakening. We're still very high on the RS ratio scale, as you can see here. So I think I should say that selective positions inside technology are still okay, because it is still one of the stronger sectors in the S&P 500, and it's clearly the biggest sector in the S&P 500. Communication services been disappointing for the last couple of weeks. Didn't rotate back up. If we look at the price chart, we will see that it is now approaching the former resistance, now support area from the upside downwards. So this is an area where we should like to find support for a new up leg. I'm not sure if that's going to work, because the structure in the relative strength did get some damage, and we see some deterioration in both momentum and RS ratio. So this one is on the watch list. If we stick with, and then you see this is last week, materials and industrials, they looked so nice when we started to go into this week, and now see what kind of damage was done in only one day. Again, it's only one day, so maybe we can recover the rest of the week, but this type of move on a weekly chart in one day is pretty significant. I don't really like that. So if we look at the materials chart here, this is the weekly chart for materials, you see this big gap down. We can go until, let's say, 60 before we hit a serious support level. That definitely should hold. The uptrend in relative strength is still okay, which is represented or reflected with the position in the leading quadrant. It's definitely still one of the better sectors, let there be no doubt about it. I mean, this break is cool, this turnaround is pretty good. Maybe it's just a short-term rotation, we'll have to wait and see, but together with discretionary, materials is still a pretty good sector. We discussed technology. Let's have a quick look at industrials. Industrials, XLI, having trouble breaking higher. We also have this gap downward. We're now testing this very steep rising trend line. The momentum in terms of relative strength is very strong. That's what we see here, and if we can pull that through, if the industrial sector can hold here and pick up some upward price moves, it'll drag up the ratio, and we will have another sector inside the leading quadrant. Very quickly, staples picking up and financials picking up. The financial sector is in broad spotlight. There's a lot of people talking about it. There are a lot of reasons to be negative on banks and financials. It's not visible yet on the tail in the RRG, but the chart itself is not super strong, so that's holding me back on being, very positive about this rotation. I don't like this. This is like a serious resistance level that got hit. We are gapping down, and we're having trouble staying above this support level in the RS ratio, in the relative strength. XLP, on the other hand, clearly the sector, the defensive sector that people are flocking to when things get uncertain, that is correcting, but we're hovering around that lower area. We see the momentum crawling above 100. We see the low being put in the RS ratio. If push comes to shove and things start to get really bad in the market, I think that XLP will definitely it will fulfill its role as a defensive sector, and we'll see the early stages of that right now, and we'll have to see if technology can live up to its role as the new defensive sector. For the time being, a lot of uncertainty, erratic movements in short-term rotations in sectors, matching with a higher VIX, uncertainty in the markets. We'll have to wait and see. 320 very important in the S&P 500. Stick with discretionary materials, a little bit of tech, and maybe some industrials as a surprise sector. And this concludes Sector Spotlight for today. Thanks again for watching. If you liked the video, please use your magical thumbs. Questions go into the comment section, where you will always also find my answers. Don't forget to tune in at noon today for the big StockCharts ACP special. It's going to be exciting to see all the new features that are already available in this platform, with many more to come. Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern, with replays on the StockCharts YouTube channel.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.